cannabis stocks can move 60%, actually between 30 and 50% in just one day on a single headline. And that's not hype. We literally just saw today's breakout for cannabis stocks. So today I'm going to break down the top 5 cannabis stocks I would put on a retail watch list, the one catalyst that matter most, and how position size in this sector should be handled in order to not to blow up your portfolio. Ladies and gentlemen, welcome to Wealth Town with me, Norbert Menjat, where I build and protect wealth. So let's get started with a video today. First of all, we're going to talk about cannabis, the 5 cannabis stocks. I'm also going to give you a bonus one at the end. It's a little bit iffy. That's why I'm not including it in this particular list. And also, I'm going to give you an ETF. And let's just start with the ETF, and that is Advisor Shares Pure US Cannabis ETF. The ticker symbol is MSOS for this. And this, basically, as it says, has only the US cannabis stocks in it. So if you don't want to invest in one of those companies, then you can just invest in the entire ETF. I just wanted you to have this, and let's just get rolling with the video. This is a 1-year chart right here, and we saw on recent news that Schedule 3 maybe today on Monday. So I'm recording this on Monday. Be very, very careful, because today on Monday, after the bell, somewhere around 4 o'clock, maybe President Trump will sign some kind of executive action. Now, the hopes are now here and high that going to sign an executive action that could somehow classify cannabis from a Schedule 1 to a Schedule 3 drug. This has major implications for the entire sector, and this is why if you're asking yourself, why are cannabis stocks surging? Well, basically, this is why, because the Schedule 3 isn't yet legal and it's not legalized, but it could be. It could go into some kind of talks. And also, we're going to talk about the 280E. There's the tax rule. There's major impact on taxes, and also banking is one of the catalysts. So let's just start with the very first segment here in the video. What's driving the sector right now? So first of all, as I said, Schedule 3 isn't legalization, but it's a huge economic lever. Why? Let's explain it simply. First of all, the US has been in a former process where HHS recommended moving cannabis from Schedule 3, recommended moving cannabis to Schedule 3, and the DEA proposed a rule, a key step, okay? Now, recent reporting suggested that the White House may be close to a action, but it's not final until you will see ink to paper, okay? Only then. This is speculation, okay? This huge jump in the cannabis stocks is pure speculation. You need to see ink to paper. The second major driver for this huge surge in the cannabis stocks is the 280E, and that is a tax rule retail investors forgot. Why? Well, if Schedule 3 happens, one of the biggest impact people expect is a relief from the 280E, which has punished operators, okay? So after tax profits for years, basically the taxes were huge. So don't overpromise. This is actually just a potential impact. Don't wait that this is going to major impact don't await this to be a major promise, but this could impact the industry. Now, the last thing is banking. And this is a bottleneck, because you cannot pay for cannabis, anything that contains cannabis or hemp or something like that, with your pay card, Visa, Mastercard, and so on and so on. So banks would just say, whoop, not for me. It's over the counter. You need to pay cash. And that is a huge hurdle for the cannabis providers. Now, even with scheduling, banking reform can lag without legalization. So bank and compliance are conservative. So keep this in mind, okay? This could also impact Visa and Mastercard. They could even surge on this. Actually, let me just check, because I do own Visa, and it has had a big surge. Okay, it has had on the same day that cannabis stock surge, the same surge for Visa, and also let's see, Mastercard. Actually, just MA should be the ticker symbol. Yes, the same thing for Mastercard. So this could happen. This really could happen. Could it happen today? Yes, maybe. Now let's move on a little bit to the second segment, my retail investor framework for this. The rule of thumb in cannabis, revenue growth is easy to buy. Okay? So cash generation plus margins plus balance sheets are what we survey here. So we need to see positive operating cash flow and free cash flow trend. And also we need to see EBITDA margins durability. Also we need to see liquidity, debt maturing, not running away, regulatory optionality, and hype risk. Okay? Because this is major hype. Let's just go back to the MSOS. This is major hype in the stock market right now. It's not oversold, but it's getting in the oversold territory. It's at 73. So it's kind of getting there. This is the speculative stock, so it could go to 80 RSI on a technical level. Now, let's go to the top cannabis, my top 5 cannabis picks. And this is purely educational content. Do not take this as investment advice. Do not take this as stock or stocks that you should invest. If you can lose all of your money. This could everything that I'm showing you right here could go to zero. It almost went to zero. It went to $2 last time, and from 2 to 0 is not much longer. Okay, so the ETF, I mean. Now let's move on to the very first one. So this is educational for educational purposes only. What I'm showing you here. Do your own research. Be very careful. If you already own these stocks, I'm going to tell you something really important here that helped me a lot in Wealth Dom. If you have a positive position, take some profits. Nobody went broke from taking profits. Okay? Nobody ever went broke from taking profits. Also, sell, take profits, and regret that you didn't get more instead of regretting that you made a loss. So regret that you didn't realize more gains instead of regretting that you realized a loss. That the loss regret is far greater than the other one. Also, it could kick you out of the market. So without further ado, let's jump into the stocks. So let's go to the very first one here, which is Organigram Global, ticker symbol OGI. Why is this on the list? Simple, because a Canadian operator that's, so not the US, a Canadian operator that has been showing meaningful improvement in revenue and profitability metrics. So we go here to financials and let's just see earnings, very slow. Annually, there we go, and also revenue rising. That's what we want to see from a company, not necessarily a cannabis company. So let's just see a couple of key metrics here. Record net revenue. Now I'm going to say it in Canadian dollars. So 70.8 million. That is 72% year to year. We also have adjusted EBITDA of sorry about that, 5.7 million. That is a 64% year-to-year growth, and we have a positive cash flow of 5 million in the quarter. That is very good. Exactly as I told you, that's what we want to see. And they're also going to report Q4 earnings tomorrow. So definitely check out their report. So if you want a less US policy binary name, OG, there's a ticker symbol, here we go, OGI is a cleaner operating story than many legacy cannabis peers. Okay, just keep this in mind. But you're also going to have Canadian price pressure. So Canadian dollar goes down, you're going to feel it in your investment. So let's go on to number 4. That is Tilray brands. Why is this on the list? Simply because the retail favorite. That means huge liquidity, huge attention, and position for international and consumer product agencies. But still, high volatility. If you take a look here at the stock, it can go up, it can go down. Year to date, 1 year diagram, whoop down, whoop up, and whoop down, and now a little bit up again. All time minus. So this is what I'm telling you, that you need to be careful. So this stock went from $1,436 to 12, and it's up now. So just keep this in mind. It's a negative 94%, 94.73% in your portfolio. Can you resist? Can you withhold such a pullback in your portfolio? That's why I suggest a minimum amount of investing if you would consider something like this. Okay, now let's just a little bit to their financial quarterly update. Shows a net revenue of growth of 5% in recent quarter, and a cannabis net revenue also up 5% per company releases. So Tilray has also reported international cannabis growth in 2025. And let's just say that, what is the ticker symbol? TLRY is a momentum opportunity vehicle. It can move harder on your policy shifts, but it's not my sleep well stock right here. So if you want to have a sleep well stock, this is not one of them. Also not cannabis, not a cannabis stock. In no way. Let's move on to the third one, which is Curaleaf. Ticker symbol CURLF. The ticker symbol is almost as long as their name is. Okay, so why own this? Why put it in your portfolio? Simply because it's scale plus international footprint and a cash-generating cash cow here. Just take a look at the 6 months, 353% up, but all-time negative 53% down. Let's go to a couple of key metrics here. So revenue, 320 million, adjusted EBITDA, 69 million, which is up 20%, or it has this 20% margin, and operating cash flow 53 million and free cash flow 37 million. So Curaleaf gives you a size and diversification, and it in a reform scenario, scale trends to get repriced first. Now the risk here is that net losses still occur, execution across many markets, regulatory frameworks, and you have a lot of headaches, as it is with all cannabis stocks for now. So this was number 3. Now let's go to number 2. This is a really interesting one. This is Trulieve. Now this one is a high margin, strong cash flow focus, heavy retail exposure, a real advantage if managed well. Take a look at these prices. So all-time up now. That cannot be true. So it's down 5 for on the 5 year, 67%. On the 1 year, up 106%. So on 1 year, it's actually at its all-time high, and this is one of the favorites because, as I said, cash cow and so on and so on. But the revenues 288 million, 94% from retail, and adjusted EBITDA 103 million, 36% margin. Operating cash flow 37 million, and management emphasizes cash discipline. This is why I like this stock. But once again, this is not financial advice. Purely educational. Do your own research. Trulieve is a cash cow first operator. If performance improves, taxes and capital access, high margin operators can see outsized benefits in this stock. Now, geographic concentration and competitive pressure by state, that's a risk factor here, but anything else being equal, this is one of the best stocks in the cannabis sector. Now let's go to number 1. Why is this number 1, and who is it? It's Green Thumb, because Cypress Hill, that's why. No, I'm just kidding, because this is Dr. Green Thumb. The ticker symbol is GTBIF. That's a ticker symbol for Green Thumb Industries. And in this sector, I want to see a name that most consistently looks like a real operating company, not a story stock. So let's just take a look at all-time highs here. It's 4K. No, let's take a look at 5 year. Still down, minus negative 55%. But the key metrics here are revenue 291 million. That's just 3 million shy from the previous Trulieve. Adjusted EBITDA of 80 million, 29% margin here. And operating cash flow 74 million. So cash cited around 226 million, and debt maturity runaway noted as comfortable. Okay, so Green Thumb is a liquidity solid margin, cash generating, and less need to back capital markets. So I like this one. I really like this one. I like the stock, but the risk here is that price compression in some markets. So, and whole sector policy risk. The headquarters is in Chicago. So, hey, who knows? Maybe. Now, let's also go to the one stock that I promised that is kind of and that is Glass House. Now, the problem with Glass House, and I'm not even going to go into the numbers here, this is a good company. They own a lot of land. The problem with them is they're based in California. So regulatory, blah, blah, blah. That's my only problem with it. Accepting anything else than that, I would say that this one would be the best company. But man, those regulations in California. Okay, so let's just say the following. Let's go to what actually matters. Portfolio sizing and risk planning for these stocks. Protect wealth mode is on right now. So what I would say, and also this is why I did what I did in my portfolio, and I'm going to tell you exactly what I did. But cannabis is a satellite position for me, not a core position holding for like some other companies that I hold. Give an example, Apple, core position. Why? Well, because I have everything in. I know their products. Their products are perfect. And I'm going to tell you something else. Are you able to build a Apple phone or as good as an Apple phone in your home alone? If yes, then don't own Apple. But are you able to grow your own cannabis at home? And if the answer is yes, then maybe the following sizing positions for cannabis stocks make some sense for you. I would say 0 to 5 to maximum 2% of your portfolio total exposure, okay? Maximum 2%. And that 2% is actually built out of either more than one company or just the ETF. Now, you can also use tranches like 1/3 to buy 1/3 now, 1/3 on confirmation or policy or something on earnings, policy changes or earnings, and 1/3 on pullbacks. That's 3/4. You're going to have a full position. And leave that position alone, and that's basically it. Now, if you already own them, I'm going to tell you what I did. I took some profits. Okay, so I took some profits today. I'm going to take some profits when the market opens, and that's basically it. Be careful with this. It can ruin your entire portfolio. Now, what should change your mind on investing more in these stocks? Rescheduled momentum revenue, reverse, not revenue. Rescheduled momentum reverse. Change your mind. Okay, so if this story dies, then you should, well, that's it. Take your losses, or I'm not saying sell everything because it could have a comeback, some sort of. But if you just got into them on current all-time highs, let's see here. This could have a pullback and break out again. Could be. Let's go to the ETF. Much better to see it here. So on a full year, it had a pullback here. We're down in June. Major upswing. We are again up at all-time highs. Could this have a pullback again? Yes, it could. Maybe today they're going to come out and say nothing. And 1 day, 2 day, 3 days, pullback. And then on Friday, they're going to say something. Stock will explode. The entire sector will explode once more. So this is extremely dangerous. Remember, danger, red, everywhere red. I'm not telling you not to invest, but I'm telling you to be extremely cautious with this one. Okay, hope you enjoyed it. Don't forget to watch my live streams daily before the market. It's called actually Before the Bell. And where everything else being equal, I'm Robert Manhart. I build and protect wealth right here at Wealth Thumb. Like and subscribe to the channel. Catch you next time. Stay safe out there. Bye-bye.